if you listen to the approach that both sides are taking at this point, digging in and using Huawei and getting us on the China side and limiting Game of Thrones being shown in China, for example. And yeah, this is getting much deeper than I thought anybody realized when we first started with this negotiation with China and we first started with the tariffs. I mean, I think initially is, okay, we'll threaten them with tariffs, China will roll over, we'll get a deal and everything will be fine. And I think the deeper we go, the worse it's going to get. It's obviously freezing economic activity. I mean, if you're a CEO in this country and you saw tariff rates go from 10 to 25, well, you're going to sit tight and see how this plays out, and the Chinese are doing the same.
What is Ray Dalio looking at right now? What are you looking at right now? What are the signs that some of those things that Ray is possibly forecasting, given the conditions, could actually come to fruition because of the trade conflict between the U.S. and China?
Well, now it's quantifying it. So we see what's going on, but what does it mean for actual economic activity? And I think the most important thing we're going to see is well, actually it's going to be in July, when we see how corporate America has dealt with it from an earnings standpoint. How much were the revenues clipped? How are they able to manage on the cost side? What were they able to pass through to consumers? What did they have to eat themselves? That's what we're really going to end up wanting to see. Yes, we're going to get some economic data from here until then, but how companies are managing this, unfortunately, we're not going to be able to really tell until middle of July when they start reporting Q2 earnings.
This is a margin issue, right? Because it is U.S. companies, just from a logistical standpoint, and it bears repeating, U.S. companies are the ones who pay these tariffs. So when CEOs on their earnings calls say we are factoring or not factoring in tariffs, it is because they are the ones bearing them, right?
Right, and how much of that tariff is their Chinese supplier going to say, okay, we'll eat some of it? How much does the U.S. company have to eat? Like I said earlier, how much is the U.S. company going to be able to pass on? And this from a cost side. We also know that revenues are going to slow too. Nominal GDP growth is slowing around the world. So the top line is slowing, margins are potentially getting clipped. At the same time that wage growth is still pretty persistent because the labor market is so tight. So this is all combining for a more challenging earnings environment than we've seen in years.
Is this a stock market where we're showing futures right now indicating a higher open here, but we are still off and trending lower near term? Is this a market that you feel as though is accurately pricing in the risks around trade between the U.S. and China?
Well, I think the bond market with this yield curve inversion is more worried about the implications. I think the stock market is still holding out hope that somehow the Fed is going to save us with a rate cut. And you'd think that if you looked at the news, the stock market would be down more than it is, and that it is not. I think I contribute to still this faith in the Fed and that they will make everything right. I think it's misplaced, but I still think it's a pretty consistent mentality.